2008 and 2009. Me and Tyler were fraternity brothers as well too. So we go way back and are excited to work together, kind of on the homeowners insurance and home sales side of things. So we're going to run through this. Feel free if you have any questions, you can stop us or put something in the chat, and we can stop and kind of go through things with you. Tyler, I don't know if you want to introduce yourself and run through the basics real quick.
Yep, I sure will. As Nick said, both of us graduated from West Georgia. As you can see, he graduated in 08 and 09, me 09 and 2013. We're excited about what Allison has in store for the alumni and for students that are getting ready to graduate and become alumni. And Nick does a great job with the insurance side, and I'm almost 4 years into the real estate market. And as Nick said, today we're going to give you a small dive into insurance and also the craziness of the real estate market, where I honestly feel like I don't know what I'm going to wake up to the next morning, the way that this market is right now. So Nick, if you want to take it away, talk about some renters insurance, and then we'll hop into some other stuff.
Okay, thanks, Tyler. Yeah, I wanted to start out with this before Tyler kind of gets into the home side of things. So, obviously not everybody coming out of college is in the market for a home. Hopefully everybody is. But from a renter's insurance standpoint, a lot of people, know about renter's insurance, but don't really know the cost of it and really the benefit of having it. Insurance is defined as the transfer of risk from one person, such as yourself, to an insurer, such as Geico. So you really, truly need to be protected properly, whether you're in your home, whether it's an apartment, a condo, a townhome, your parents' house, wherever you live, you need extra, I guess you call it umbrella protection for your personal property as well as liability. I was lucky to have my mother-in-law, who has been in insurance for years. When I graduated college, I moved into an old house that was built, back in the 20s and in the Virginia Highlands area in downtown. And so you're like, you need to get renter's insurance. I was like, yeah, it'll be fine. But I was like, all right, well, let's do it, because it's only average about $200 a year. So the cost of it versus the benefits you get from it greatly outweigh that cost. So I actually had a claim the first year after I graduated from college. A girl below me decided to use a salt lamp and have too high a wattage bulb. Needless to say, the bulb exploded, caught the apartment on fire, and almost burned the entire building down. But I had about $20,000 worth of fire and smoke damage to my apartment, my TVs, all my clothes, my couches, everything had to be professionally cleaned. And all of that was taken care of through renter's insurance, for me paying, I think at that point, I paid $125 a month, because that was 12 years ago. A lot of people don't understand, the coverages that are needed. It helps protect your personal property coverage. There's also, renter requirements. So a lot of apartment complexes require you to have renter's insurance. So we can look at that and help step in. You actually get a discount. So if everybody's required to have it, obviously there's more protection around you. So you get a discount from Geico for having a policy such as that. Liability coverage also comes into play. It starts at about $100,000. Liability coverage protects you in the event, say you've got a dog and your dog bites your neighbor and they have to go to the hospital and then they end up, taking legal action. That liability coverage will help protect you and protect your assets, so you're not having to come out of pocket if something happens. Loss of use coverage is another component of renter's insurance. So basically, if there is a fire, when I had that fire, I had to be out of my apartment, for I think it was 3 months. So I was with Travelers at that time. Travelers paid for me to be in a hotel. They paid for food for me to eat out. So you get extra benefit from loss of use that in the case of a claim that you have to be out of your residence. And then basic deductibles. Deductibles are what comes out of your pocket before the insurance starts to kick in and pay. Generally, $500, $1,000 deductibles are the standard. So you would pay, say you've got $5,000 claim, you would pay $500, and then they would give you the $4,500 on top of that. So that's kind of the breakdown, of renter's insurance. Again, it's only a couple $100 a year. So it's something I push to all of my customers when we're getting them set up with their auto insurance is, hey, let's cover your personal property. Let's cover some additional liability for you. At $200, we can bundle it in, get you a bundle discount with Geico. So that's kind of renter's insurance in a nutshell.
Yeah, so Nick, when I lived in Buckhead, we lived on the first level, had a nice patio, and there was probably a 3 or 4 foot wall to keep anybody out. Well, we had a nice tailgating generator stored in our little outside closet. And one night we heard somebody jump over the wall, figured out that they stole our generator. Well, we had renter's insurance, and luckily they reimbursed us for the generator. But without that, we'd have just been out of it. So yeah, I agree. It's good stuff. So
If someone who didn't,
I totally spaced on the theft side of things too, but yeah, obviously the renter's insurance covers you from theft too. So yeah, thanks for the assist there, man.
Yeah, I got you.
Speaking from someone who didn't have renter's insurance, the very first house that I ever rented was in North Georgia. I was working at Reinhardt University, and I lived in the woods on a golf course. It was beautiful. I lived in this tiny cabin that looked like a gingerbread house. And one day, my then boyfriend, now husband, came up, and we were cooking pancakes and noticed that there were ants inside of the sealed pancake mix. And I was like, that has to be a problem. So we started going around looking at the house, and we noticed that the carpet was moving and the house was infested with ants. Come to find out, it was infested with more than ants. It was infested with honeybees, which were attracting the ants to the honey. I did not have renter's insurance and was screwed. They had to chop open the top of the house. The my landlord told me that the house didn't have those problems before and that I was going to be responsible for it financially. We had to get a lawyer involved. It was awful. So highly recommend renter's insurance. Even when we lived here on campus, after we got married, we then got renter's insurance, even though we were living at the university. So highly recommended. Y'all were smart. I wasn't, and almost got in big financial trouble and legal trouble having to deal with these people who were trying to put it back on young college, fresh out of college student to deal with their bug infestation.
Yeah. Ooh, that sounds terrible.
That's a landlord issue. I mean, come on now.
Yeah, I agree with that.
That's not your fault.
All right. Well, Kendra, I've got one question for you. Have you ever bought a house?
No, I haven't.
All right. Well, then we're going to walk you through the process, and I'm not going to throw every single term at you because then your head would start spinning. But want to give you kind of just an overview of what this process looks like. So when you're ready, you've got some education and some knowledge about it. So I've got it split up into different portions of the home buying process. So the first part of the process is pre-contract. Where do you start? So Kendra, say a year from now, 2 years from now, you say, hey, it's time for me to buy a house. I'm ready to do this. Where do I start? My recommendation is always going to be call a realtor that you have heard good things about, or that you personally know and that you feel will represent you the best. That realtor is going to ask you one question. Well, they'll probably ask you several, but the first question is probably going to be, do you have any relationship with a lender to help you buy your house? Unless you're just sitting on, a pocket full of cash, you're going to have someone help you purchase the house. That's where the mortgage lender comes into play. So mortgage lender is going to ask you for, hey, what's your employment history? What's your salary, or what do you get paid hourly? How many hours do you work? kind of getting an idea of, what your financial situation is and what they might be able to lend you. At that point, they will give you what's called a pre-qualification or pre-approval, depending on how much you provide them. That's going to tell us, hey, Kendra has this kind of budget. This is what you can go and search for. So the financial side of that is taken care of. The next portion is the home search. I don't think you're a human if you haven't dreamed of what you want in a home. I think all of us are, have always dreamed about what that dream home looks like, or what we would want, or what we would need in a house. So that's where I would come to you and say, Kendra, okay, what do you need? Do you need 3 bedrooms, 2 bath? Do you want some land? Do you want to be in the city? Do you want to be out in the country? Do you want to be away from the hustle and bustle? So that portion of the process is really getting to know what you want in a home. And that's where the home search starts. That's when you would start, with your realtor, going and looking at these houses as they find them. If I can offer one bit of advice, when you start seeing these houses with a realtor, be honest with them. Tell them what you do and don't like in these homes, because that's the only way that a realtor is going to know, as we're walking through a house, hey, I don't like the way this bathroom is set up, or I don't like that the kitchen is closed off. I want more open concept, that kind of stuff. Your feedback is going to be important to anyone that you're working with, so they can know what it is that you're looking for. Next slide, please, Kate. All right. So say you find the home that you want, that you're ready to put in an offer. Your realtor is going to really discuss the financial side of things with you. All right. The home's listed for $250,000. In this market, if a home's listed for $250,000, you're probably not going to get it for $250,000. You're probably going to be closer to $260,000, $265,000, $270,000. And they're going to walk through that with you, depending on how the market is. They're going to help you form the best offer. Offers are going to include, obviously purchase price is the biggest thing. When you want to close on the house, when you want to officially sign off and purchase the house. Things like, it's called earnest money. It's basically your down payment on the house. Those kinds of things. They craft the offer for you. They send it over to the people that are selling the house. That's when the negotiations would start. And any term that's in the contract or that's in the offer, the people that are selling are going to look at it. And if there's things that they don't like, they're going to come back and give you a counter offer and really start negotiating. It's very rare that you send over your first offer and they say, hey, yeah, that looks good, let's go for it. So don't be afraid when someone says, hey, we're going to counter your offer. That's just, it's a compromise, really making sure that both parties are getting what they want and what they need. And then at that point, if everything is agreed upon, everybody would sign and would have what's called a binding contract. That's when all the time, the deadlines really kick into play. So you've got things like your inspections, your earnest money is due by this time, your appraisal, which appraisal is basically just an appraiser coming out and telling you what they see the value of the house being. So the binding contract is when all those time frames really kick into play. A good realtor is going to have a spreadsheet that says, hey, we've got to do this, and this by these timeframes. Otherwise, those are put into place to protect you as the buyer. So those deadlines need to be front and center to make sure that you're fully protected there. All right, so I jumped ahead a little bit and instead of appraisals, inspections. In the state of Georgia, and in any state, there's what's called a property disclosure. The homeowners that are selling the house are going to disclose anything that they know about the house that is wrong with the house, or the updates, repairs that they've done. And I emphasize what they know, because if they don't know it, they can't disclose it to you. That's where the inspection comes into play. Home inspectors, um, your realtor would help you line that up, give you some recommendations as who to use. The inspector comes in and does a full inspection of the house, and gives you, it's usually about a 60-page report. It's fun to look through. But so they give you the inspection report, you go through, and at that point, if there's something wrong with the house that you feel like the owners need to fix, that's where those requests come in at that point. And then after that is when the appraisal comes into play. The appraisal, like I said earlier, gives you the value of the home. Your purchase price could be $250, but that appraiser might come in and say, hey, this house is worth $275, and you've got $25,000 worth of equity already built in. On the flip side, the appraiser might come in and say, hey, this home's only worth $225, but you're purchasing it for $250. There's a little bit of a difference there, and there are some ways to make up that difference. I'm not going to go into those because I know this is just a brief overview of the process. That's where, your realtor is gonna jump in and really take care of you. And then the last part before I send it back over to Nick is the financial process. So as soon as you get something under contract, your lender is working behind the scenes and with you to get all of your documentation for your employment, all of your W-2s, 1099s, however you get paid, checking your credit, really just making sure that what they had pre-qualified you for, that they feel good about lending you that money. And part of that financial process and part of that getting ready to close is home insurance. A lender is not going to lend you money on a house if you don't have it protected with some home insurance. Because what happens, Nick, what happens if someone doesn't have home insurance and the home burns down?
The bank's out a lot of money.
Exactly. So Nick's going to run over some home insurance with you.
They will not let you move forward.
Yes.
Yeah, so I deal with real estate agents like Tyler and mortgage agents, every day of my life, because the one stipulation for you to be able to go to closing is that you have homeowners insurance. Because yes, they're lending you the money. Yes, you're buying the house. It is technically yours, but the bank owns it until all payments are made. So they want to make sure that asset's properly protected. And in order to do that, you need insurance. And so really you can engage us as early as the inspection process. A lot of times, we work as a trusted advisor for our customers, to provide quotes, even if they are just looking. I mean, do we want to be able to, do 15 quotes? No. But if you narrow it down to 2 properties and you're getting the inspection side of things, let us take a look at it and let us take a look at those disclosures, because, a lot of times there's issues in there that's going to affect your insurance rate. Anytime you get new homeowners insurance, an inspection is done on the property by the insurance company to be able to make sure that everything is properly maintained, the roof's in good condition, there's no pre-existing issues with the house, so they're not having to cover claims for something that's pre-existing. So we've had numerous times where our customers early in the game come up and say, here's the inspection, here is, the disclosure report. It's saying that the roof was replaced, 15 years ago. Well, in some companies that falls outside of the window of coverage. A lot of them are 20 years, some are 25 years, but knowing, the roof age, how old the house is, when the last time the electrical circuit was replaced, whether it's got knob and tube, whether your fuses or whether you've got circuit breakers, that factors into, what your homeowner's insurance is going to be, and gives you more leverage to go back to the seller and say, hey, listen, these things need to be addressed because they're pivotal points and they're main key structures of the house. So I need this to be done before I buy it. So, the main components, to insurance coverage really is a dwelling coverage. So that's the main coverage. So that's the main number that everything is basically factored on. So it's essentially, what is it going to cost to replace your house? Generally, it lines up right around with the sale price, but sometimes it can be a little bit less because we're just covering the house. We're not covering the land. You've got land value obviously built into that buy price. So your dwelling coverage is going to be X, say it's $300,000. Everything else in here, whether it's other structures, personal property, loss of use, are all a percentage of that dwelling coverage. So you want to make sure that, based on, the size of your house and the cost to replace your house, you're fully covered. Right now, with things as crazy as they are with lumber prices, we want you to be at $200 to $250 per square feet of coverage. Other structures comes in. Sometimes that applies. Like in this picture, they've got a nice fence over to the left there. Other structures are fences, sheds, pole barns, big nice decks, gazebos, or anything you may have out, on your property that's not physically attached to your building, an exterior garage, a mother-in-law suite, something like that. So you want to ensure you've got the appropriate amount of coverage to cover anything that's not your house. Personal property, the way we best explain it is if you were to take your house and dump it upside down, what would fall out? That's personal property. So TVs, furniture, jewelry, firearms, anything that's in your house that's your personal property. You want to make sure you have enough coverage to cover all that in the case of a catastrophic fire and you lose everything. God forbid, we don't want that to happen. But if it does, we want to make sure that you have enough personal property coverage to replace everything you have at like new. Loss of use, we already kind of covered this on the renter side. But if there is a fire or water damage or something that you have to be out of your house, loss of use coverage will cover you for that specified amount. For a hotel room, if you've got to eat out, you've got to go to the laundromat and do laundry, any expenses you incur for being displaced from your home is covered through loss of use. And deductibles, those are the same as renters. You have deductibles in car insurance, you have deductibles in renters insurance, you have deductibles in all insurance. So this is what you have to come out of pocket before insurance is going to pay. Generally for homeowners insurance, we recommend a higher deductible just because if something breaks and it's $1,000 or less, you're going to spend the money to replace that yourself rather than putting in a claim and having your rates increase due to a claim. So I advise anywhere from $1,000 to $2,500 to a $5,000 deductible. It's totally up to your financial capabilities and where you're at in your life. But those can be tweaked, and it changes obviously the price of the annual homeowners contract. And personal liability, we touched on this in renters as well too. So generally, we start out baseline about $300,000 in personal liability. But we can go up to 500, and then after that, we can put in an umbrella policy to help cover you additionally. So that helps you if somebody comes to your house, they fall down your stairs and they get hurt. We're able, and then they come and sue you saying, oh, your top step was loose, whatever. We've got you covered from a legal standpoint up to those specified limits. And generally in this area, I know I touched on average premium. Our average homeowners premium in the Southwest Atlanta area is anywhere from $1,500 to $1,600 a year. So it's not much, in the grand scheme of things. Unfortunately, insurance is one of those necessary evils. You'd rather have it and not need it than need it and not have it. And most of the time, 95% of the time, we build this into your mortgage payment anyways. So I'll work with Tyler, I'll work with your mortgage broker to build this into your escrow account that you have when you're buying your home. So it just comes out of your monthly homeowner's payment. So it's taxes and insurance, and then your principal and interest. So it makes things easy. You're not having to pay another payment. It just naturally comes out of your monthly home cost.
And then it's all done, and you have a new home. Easy process, right?
Yep.
But no, Kendra, so you see why there are people like Nick and I that do what we do. This is stuff that we do on a daily basis. And if we were to say, hey, go ahead and just go try to start this process by yourself, you probably wouldn't know where to start unless you've got family and friends that are involved with it as well. So that's where our expertise comes into play. And every process that we talked about here is something that you're not doing it alone when you have someone like Nick and I on your side. It's where we walk through the entire process from getting you hooked up with the lender, to starting the search process, to getting the insurance set up through the lender, to make sure that we have everything done to get you that new house. So do you have any questions? I know we just threw a lot at you.
Not really. Just kind of soaking it in.
Yeah, it's
Did
definitely
we
a
throw
lot.
anything to you?
What was the question?
I was asking Allison and Kate if we threw anything at them that they didn't know.
No, I just think it's helpful to, I didn't have anyone sit down to go through all this with me. So I was learning it as I was in it. And it was very stressful because I just didn't understand. There's all these terms. And so this is super helpful to kind of have a crash course before you dive into having to do all this.
Yeah, when we bought our house,
Yeah.
we did have a family member who could kind of walk us through this process. And even still, it was a lot. And even now, we've had to make insurance claims on our homeowners insurance. Like, we realized a leak in our roof about, 1 or 2 years ago, and called somebody out, and they said, you've got a ton of hail damage. It was after a hurricane, well, I guess 2 Octobers ago. And so we just paid our $1,000 deductible and got the whole new roof because it was hail damage and wind from the hurricane and like all this stuff that came through. And we were actually really grateful to have that homeowners insurance because a roof is expensive, as you know, and to just have to pay our deductible was great for that. So,
And I will say that, Geico is one of the good ones that is easy to work with. There are some that I've seen in my years of experience that are not as easy to work with. I'm not going to say any names, but I will say that it's not Geico. Geico is good. So
Yeah, I would say the same about that. It's just understanding your
Thank you, Beth.
coverage, right? So like understanding who you're working with, having somebody that you feel comfortable calling. Like, I was even talking to my parents, I'm helping my parents move, and we were discussing all of this. And they were like, we don't know our insurance people. I was like, well, that's really unfortunate because I know mine and feel like I could call them at any second. And so it's helpful, especially typically you're in a time of crisis or a time that's like really stressful with finances. So insurance folks, Nick, I don't know if you feel like you have to be a counselor sometimes, but it's important to have someone that you can trust and you can understand your coverage. So we appreciate you presenting that, Nick, and definitely someone we can trust.
Yeah.
and I will give
No problem.
you.
Happy to help. And I was
ahead,
going to say, feel free, take down our info. If you have any questions, both of us will be happy to help. If you have any friends and family who are looking for options as well, me and Tyler will be happy to help. We can, whether it's Carrollton area, we're both licensed in Georgia and Alabama. So, wherever you might be looking, we can help. If not, we've all got networks all over the country. So if you decide, hey, I think I want to move to New York right now, sounds great, then,
Yep.
we can be a trusted advisor for you and also help you, find another trusted, partner in those states where we can help.
I'll give you one last piece of advice, and this is for everybody on this call. If you are looking to buy a house, do not please, it helps everybody out. If you don't call a big box mortgage company like Rocket Mortgage or anything like that, always look for the local people. I'm not just saying that because Nick and I are local people, but as Allison mentioned with insurance, being able to know who you're picking up the phone and calling makes a difference. You pick a Rocket Mortgage or someone like that, you're calling an 800 number and it's just whoever picks up the phone that time. Just makes everybody's life easier. So
I can add on.
Yeah, and generally, most of us from a local standpoint have all worked together as well too. So, you know, Tyler knows a lot of insurance agencies. I know a lot of real estate agents and mortgage brokers. So like odds are we've worked together in the past, so we can, you know, we already have a relationship built to where we can build on that and help you out best.
Yep, absolutely.
Tyler and Nick, thank you so much. Kendra, we so appreciate you joining. Definitely share this with your friends. And this QR code here on the screen will link you to all of our upcoming alumni events. We're working on building out our calendar for the upcoming year. So definitely stay tuned to that. But it was so nice to meet you. And Nick and Tyler, thanks so much. We appreciate it.
Thanks for having us.
Yeah, thank you.
Thanks.
Yeah. And Kendra, the next one on the 22nd I'll be hosting is on auto insurance and car buying. So if you're interested in that, and you know, I don't know if you have your own insurance or on your parents' plan still, you know, we can talk through that and give you some more information on the car side of things as well.
Gotcha. I'll be at that one too.
Hey, bring a friend.
Perfect. Well, thank you much.
Thank
Thank
you.
you.
Thanks, y'all.
Thank you.